Okay, guys, welcome back to the Restart Speaker Series. Today we've got Todd Coughlin, and Todd is from CTM CPAs and Business Advisors. We've got a very timely topic. Todd's going to be talking about how to get financial control of your small business. So whether you've been in business for decades or you're just starting a business, really, really important topic today. If you haven't gotten a copy of our book, Restart the Small Business Guide to Thriving During Chaos, as always, it's available on Amazon, $14.99 in paperback, $9.99 in ebook. So without further ado, Todd, welcome to the show.
Thank you. Thank you.
So, Todd, tell us first of all a little bit about your background, kind of personally, where you went to school, your experience, things like that.
Well, Todd Coughlin, I'm a CPA. I work at CTM CPAs and Business Advisors in Lincolnshire, Illinois, northwest suburbs of Chicago. I've been here for 23 years. It's actually where I went to after graduating college. Went to Northern Illinois University. Took kind of the long road there. I was gonna teach history. I got to the point where I was just about to student teach, and then I said, maybe that isn't for me. I'm going to get back to accounting, which I took some accounting classes my first couple of years, and I liked them. And my roommate was an accountant, and he just graduated, and I'm like, I think I could do that. So, I graduated Northern in '97, and I've been here at CTM ever since. Kind of worked my way up. Staff accountant, senior accountant, manager, and been a partner for probably the last 7 years or so.
Great. Well, I think someone told me once that we talked about history as it relates to accountants. So you do have to be a very good historian with a lot of detail, right?
Right. Yeah, we're always working on history because even when we're doing monthly financial statement preparation or certainly last year's tax return, we're always working with the past. So it's funny when I talk to my clients and I'm talking about this month, I'm really talking about last month because that's what we're working on. So yeah, we're always working on recent history.
Yeah, and I suppose, looking forward, as they say, those that don't learn from history are condemned to repeat it too, right? So a lot of it is providing that guidance as your clients move forward too.
Yes.
So let's get into the kind of the heavy duty one and the contemporary topic. Obviously, we're living during tough financial times with COVID and small businesses. What are some, when you're looking at your clients, and obviously we're not going to talk about specific clients, what are some of the big challenges that you see that small businesses and mid-sized businesses are facing right now?
One of the real challenges that they all faced, and most everybody faced, especially off of the get-go, was, and our firm did as well, is the fact that everybody was remote, and you couldn't have your office staff in your office. It really forced a lot of our clients, and here at our firm, we were prepared for it. We had a number of people who worked remotely going into it, but they didn't do it as a rule. They just did it, when they had other commitments and maybe they had a long commute or it was a snow day, but they worked at home.
Right.
Many of our clients didn't have that. They had their internal bookkeeper, would come into the office because, their accounting software is installed locally on the computer in the office. And, when everything happened and, the office was closed or, their staff had to stay home with their kids because their kids were doing e-learning, everything changed. They had to figure out a way to, make their systems more, remote friendly.
Right.
And then it was challenging for a lot of them. They've had a lot of workarounds. Most of our clients, fortunately, we've been working with them for a long time to try to get them, paperless and, on a cloud, whether it's our hosted software or whatever the case may be. But, it really came to pass that, these things had to be fixed on the client side, so that was a big challenge for them, outside of the actual, financial issues they may be facing with their business, depending on what line of business they're in. We actually work with a lot of restaurants, they've had their challenges, obviously, throughout the whole the whole pandemic time period, these last 7-8 months.
Do you find that, and again, a lot of the people watching the show will be comfortable with cloud-based, but do you still find a certain amount of concern about security when it comes to moving to cloud-based accounting software, or is that kind of a days of a bygone?
Security a little bit, accessibility somewhat, because you're reliant on somebody else's server, and your internet connection,
right?
And the speed of your internet connection. So we've had a lot of people had to upgrade their their connectivity throughout all of this as well. So I don't think it's as much a concern with the security side as opposed to the accessibility side. I think depending on what sort of cloud platform they're dealing with, I think there's some sense of security knowing that Intuit, which is the Quickbooks, that there's a certain amount of trust there with that.
Sure.
With
Okay.
that company.
So we talked about one of the challenges is working remote, obviously, and moving that, to the cloud. What are some of the other challenges that you see businesses facing in general when it comes to, financial challenges? I mean, I guess beyond, the obvious drop off in sales.
What would specific to what we're going through right now?
Yeah. So, so if, I'm a small business and, at the risk of maybe I'm kind of giving you a softball here, but let's say times are good, right? And I've been kind of sloppy with books, and now things are tight. Do you have clients in that situation, where things are coming home to roost?
Yeah, absolutely. I mean, there is a lot of, and this is going back more towards the late spring, early summer. There were a number of clients who were looking for break-even analysis. What's their minimum sales volume that they need to have on a monthly basis to stay afloat? If they're not hitting that, what's their bleed rate? How much of their cash reserves are they dipping into? What can they do to help mitigate that as far as streamlining some of their operations? I mean, at least with some of the clients that we work with, their lenders, their landlords, kind of worked with them. There's a lot of rent deferments, and certainly the SBA has helped out a lot of small businesses throughout this time period too. But even other lenders gave a month or two interest only, or 3 months interest only on their debt service, which helped especially these when you're talking back March, April, May, which were really the worst of the months, at least from our client standpoint. That really helped them get through.
Okay. So let's get into some of the tools. I mean, originally we said we were just going to focus on QuickBooks, but Todd and I talked a little bit yesterday, and there's we want to talk about it at a high level as well. But in terms of the software tools that are available that that someone could just go out and purchase themselves, what are some of the more common tools that people can choose out there?
Well, when you think about the traditional accounting software, I mean, QuickBooks is the name most people know.
Right.
And traditionally, it was a locally installed, desktop version, and it is an all-encompassing, works for everybody type of software. Most of our clients that have and use QuickBooks, they may be using, a fraction of the capability of the program. They may not have to do invoicing to their customers. They may not, have receivables or a significant amount of payables. They more or less use it as a checkbook and a bookkeeping software in that respect. But that's the old traditional desktop version, whether it's locally installed, on a specific computer in your office, or if you have a network, or even a hosted version. There's companies out there, Right Networks is one that I can think of, that they specialize in hosting the desktop version of QuickBooks. So the clients are using a cloud-based platform, so they don't have to worry about the infrastructure on their side to host the program, but it's another company hosting it.
Right.
But more and more, everything is going to the cloud.
Sure. Yep. Yep.
QuickBooks has their QuickBooks Online. They call it QBO. And the advantage of that is just the integration that you have,
Right.
which I can talk about a little bit later. But, in addition to QuickBooks Online, there's all sorts of apps out there now to help small businesses with expense tracking and recording and, trying to automate some of the tasks in their office that, have always been manual processes. When it comes to paying your bills and everything, there's a couple really cool things out there that really help to streamline that,
right,
and make it a paperless virtual process, which in turn, in hindsight, really could help, if the situation continues with, everybody working remote.
right.
I can bring up some of those examples in a little while.
Yeah, when I remember when I implemented QuickBooks I guess it was my first firm. I wasn't aware of all of the capabilities and some of the challenges. Frankly, I used Excel. Now, this was probably 15 years ago. I used Excel and I wasn't keeping that up to date. I would print out an invoice and I would send it to a client, and it was a nightmare. And so once I actually dug into it, I realized I could integrate it with my bank account. And so a lot of our bills were recurring. We sold software. We had a monthly retainer, and literally set up QuickBooks. Invoice went out to the client same day of the month. They would pay it online. Money went into my bank account, and it took care of my books. And I got to a point, maybe I was a little cocky, but it worked. I said, we do not send paper invoices and we do not accept checks. And then people said, oh, you mean I could use a credit card and get miles? I'm like, why, yes, you could. So it was fantastic for me. I mean, not only did it help from an accounting standpoint and controls, it actually, my receivables basically went to nothing. And you don't get people saying the check's in the mail, and you don't get, people saying, oh, I didn't receive that invoice, because it's all automated. I mean, it's taken care of for some businesses of a full head count, right?
Yeah. And, the way you described it is what we see with, clients as they grow. Oftentimes they get the accounting software because that's what they're supposed to do, but they really don't use it like they're supposed to. They use it after the fact. And just use it as a way to, review their bank statement. And then they think, oh, I have to record all this stuff in my accounting software because my accountant's going to need it. As opposed to, investing a little time in the setup, maybe get a little training, work with your accountant or your bookkeeper to do exactly what you did and set up a lot of the integration that's out there. Most of these or a lot of these processes are just that. They're just processes that have to be done. You have to record all these automated payments that are coming out of your bank. You're not doing anything to initiate them because they're already set up, but you got to record them. So why not integrate your accounting software with your online bank access and set up a rule that, anytime a $5,000 charge is, posted to, Blue Cross Blue Shield, your accounting software pulls that in, and it says, oh, that says Blue Cross Blue Shield. It must be insurance expense. I'm going to post it to, and that's what you do. You were doing on the receivable and the invoicing side, but on the payable side too. There's a lot of, setup that, if you invest a little bit of time up front, it's going to save you, countless hours forever. Like you said, you kind of get it on autopilot a little bit,
So I would do work with a lot of young entrepreneurs as well as, people that are mid-career as well. But one of the funny things I hear from my students, as they've gone through accounting and entrepreneurial finance and they start their business, they're like, oh my God, this is what they were talking about. Or, man, I wish I'd paid more attention. So having said that, when we look at the critical financial statements, the balance sheet or the profit and loss or the cash flow statement, obviously they should do all. But is there one of those where you kind of zero in, or two of them that are particularly important for a small business?
I think initially, it's the P&L, your income statement, in conjunction with your cash flow statement if you're not a cash basis taxpayer.
Right.
If you're looking at your income statement, you're able to really analyze what's going on in your business. If you're just looking at your bank account or just looking at your balance sheet and seeing, oh, I got X amount of dollars there, that's good. That'll get me through the next month and the next month. You're really not seeing where your opportunities are to have that balance in your bank account go up, because you're not looking at the behind the scenes information that's there in your income statement or your P&L.
Right.
And when you look at that, you should have some sort of expectation, and certainly analyze, key expenses that you define as such, your cost of goods sold, your labor, maybe some of your supplies, if, depending on what kind of business that you're in. But that's really where, if you can control your P&L, the bank account will start.
So I want to kind of reflect back to companies that I've owned. So one of the things, and I have a small company at this particular point, I just had 2 employees. I mean, it's myself and my business partner. And I was hammering during the week, frankly. He was the software developer and I was doing accounting and legal and marketing and sales. And I would hammer on all those things during the week. And then eventually I started doing my books and my accounting on Saturday mornings. And frankly, I had less and less time with my family, as I'm sure a lot of your clients, it's work. And, one of my friends said to me at one point, Dave, you're killing yourself. Your focus needs to be on sales. And everything else, just frankly, get rid of. Find other people to do this other stuff, and you're going to be less stressed, and you can focus on growing the business. I mean, and I got to the point where I actually outsourced this to a bookkeeper and accounting firm. I mean, how common is that? Do you see small business owners falling into that trap very often?
Yeah, all the time. Where, when they start off, they want to have total control of everything. They want to be in charge of the checkbook. They want to, write all the checks, make all the payments, because in their mind, that's how they know where their money's going. And, there's truth to that, of course. At some point as the business grows, you're not in business to be a bookkeeper for your company. You're in business to grow that company. So you have to start thinking, by outsourcing some of these accounting processes and doing it the right way, that'll allow me, the business owner or the salesperson, to, devote more time to building the top line, and, the cost of, outsourcing it, whether it's outsourcing it to a bookkeeping firm, an accounting firm, an individual that you hire, or, I'll call this outsourcing, but the other way to do it is to, invest in some processes or some accounting software that, circling back to what we were talking about before, does a lot of this stuff for you.
Right.
When you can have, an accounting software like QuickBooks Online, and use, on your payable side of things, there's a cool bill pay approval process. It's called bill.com. And what that does is, if you're looking at your payables, you receive the bills directly up on this cloud-based platform. Everything's coded for you, but nothing's paid until you approve it. You set it up so, maybe you are the approver, or maybe somebody else is the approver. Maybe you both are if you have a business partner.
Right.
And then once you guys, get your notification on your phone that you got bills there, you can look at them, you can view them. You still have the same amount of controls as you did when you were, spending your Saturday mornings doing your bookkeeping. But you're eliminating a lot of the processes from a manual process where you're, cutting checks, stuffing envelopes, mailing them, to press a button and it's paid.
Right.
And when you think about the cost that you're going to incur, it's minimal as compared to the time that you're saving that you can devote to actually running your business.
Yeah, it's all about that opportunity cost, right? I mean, what how much more business can you generate in an hour? You might say, okay, well, I don't want to spend whatever, $150 an hour on an accounting firm, but if you go $200, whatever it is. But if you can generate more than $200 in an hour, which, hopefully you can, then it just becomes a no-brainer. I think, the other thing that you triggered was this notion of automating steps. I mean, there's marketing automation systems, which we talked about in one of our other shows. But the other is services like DocuSign, right? Where you're getting legal, we've got an account that I manage, and we had to move someone off an account and add an account. And that used to take an hour and a half at a bank. And now, boom, it's, a message we get from the bank. I approve, goes to another person, approve, boom, done. Right. So same sort of thing. So, all right. So let's move to some questions. So our first question is from Charlie. What's the most efficient way to stay on top of your cash flow so you'll always be aware? Let me toss that out to you, and then I've got kind of another, add on to that. So how should someone stay on top of all of that? Because obviously it's a lot of work, just growing the business as well when you're small. But how do you stay on top of it?
I think what you need to do is, set up expectations, a cash flow forecast, based on what you expect your income statement to look like, your revenues and expenses, so you have an idea of where you think you should be. Okay. I don't think looking at the bank account every day really helps, because there's so many things that can go into that. It could be just timing differences with payables and receivables. But if you're looking at and reviewing your financial statements, especially your profit and loss statement, against some expectations, you should be able to, see that you're meeting them, and then the cash, should be there. You should have the cash flow should follow. Of course, you're going to have to, maintain your, your receivables. But if you do kind of what you were mentioning before, as far as like having that receivable process, automated and streamlined, now you're not going to get into a situation where your P&L looks good. It looks like you should be making money, but you don't have it, and you don't have the cash. You have a bunch of receivables that you're chasing down. So review the P&L, but set up systems to make sure that your receivables are, received as expeditiously as possible,
Right. So let's, I want to move on to another topic. This is going to be really timely, which is preparing for your taxes. I'm sure you're going to smile at this point, or maybe you're going to shake your head. What are some of the big do's and the big don'ts? Because obviously you're probably doing them virtually year round. You probably have a 60-day window because of fiscals on the annuals and, delaying. What's the term I'm looking for? Not delay. Extension. So what are some of the big do's and the big don'ts? Let's say I'm managing this myself, and then we'll actually go to a second question when you're working with an accounting firm.
Okay, so I'll start with the don'ts. Don't do everything after the fact. Don't do it, because you have to get ready for your taxes, and now you're trying to aggregate and accumulate everything for the prior year. In February and March of 2021, you're trying to put your books together.
Right.
Current. And that, it really is very much related to what we were talking about before, because if you stay current, you're going to have accurate financial statements, which allow you to better run your business, but don't get in the trap where you're getting behind on everything, because you're going to not have the ability to have the tools, meaning your financial statements, to see how you're doing. And then B, you're creating a monstrosity, a huge amount of work that needs to be done, to put everything back together.
Right.
And when I found when clients do that, it ends up costing them money, in that, when we receive it as the tax preparer CPA, we're going to get books and records that, they don't balance, nothing's categorized right. Receivables don't tie out, payables don't tie out. But the QuickBooks file, they entered everything into the bank account, but the bookkeeping was terrible. So
Right.
it's going to take us, 3 times the amount of time, or any CPA, 3 times the amount of time to actually put the tax return together, which ultimately is going to cost, the taxpayer a lot of money because, we're paid basically,
Sure.
We're selling our time.
Right. Yeah,
So,
absolutely.
yeah.
We've got a question from Braden. What would you suggest is a good accounting/financial strategy for a company that depends on accounts receivables? I think what we're trying to say, so Braden's company does contracting. I mean, they're basically going to be managing government contracts. So
Okay.
let's talk about receivables. What are some of the general tips you have? Well, why don't you define what receivables are, obviously, for those people that aren't aware, and then give us some general tips on managing those.
All right. So, I mean, businesses, certain types of businesses, they rely on their receivables because, you go to a quick service restaurant and you're going to pay when you order your food, and, they don't have receivables. But, in contracting work, oftentimes,
And just to clarify, guys, receivables are what people owe you. Payables is how much you owe others. So
right, exactly. So
go ahead.
I would have a receivable if I was going to be preparing your tax returns, and I'm doing the work, and I'm going to bill you later. At the end of the month, it's in my receivables because I've just billed you. You haven't even gotten the bill yet.
Right.
When you get into, especially like contracting work, depending on the size of the contracts, you may have very large receivables. So one of the things that I would recommend is progress billing. So there is some sort of payable or receivable that's due as the job is progressing through. When you reach certain benchmarks, because you don't want to have the entirety of the project due upon completion, because your work's done and you haven't gotten paid for it. You haven't gotten paid a dime. So also, depending on your familiarity with the client, you might want to charge an upfront retainer, to just get the project going. And then once you do get into the project, you really have to, as much as you want to look at your P&L to see how you're doing from an operations standpoint, you have to collect the cash that's due to you. So that is one area where, I would strongly focus on the aging of your receivables. You want to be able to identify when things are getting older than they should be. And you really need to stay on top of your clients and your customers to make sure that they're, holding up their end of the bargain and paying you.
Yeah, one of the things I remember, I used to, when people were paying late, right, calling up and asking for the money, I almost felt guilty doing it. And I reflect back to my mentor, Joe. And he said, because I was struggling with this, I'm like, Joe, I really don't like calling. And he said, think of it like this, Dave. Think about the fact that they're stealing from your family. And I'm like, whoa, okay, guilt gone. My guilt vaporized because, and it's kind of a harsh term, but you've already done the work. Whether you've given them products or you've given them your time, that money is owed to you. So don't feel guilty about asking, for money that people owe you already. I think, the other thing I reflect back when you talked about getting upfront payments, I didn't used to do that with my first firm. It was an ad agency. And I got burned because I was using outside contractors, graphic designers, videographers, programmers. And when I was quoting these deals, obviously I'm making a commitment to these contractors that I'm going to pay them. And I had clients that weren't paying me, and my contractors didn't care. Right? I was using their time. So I went from 10% down to 20% down to 30% down, and that worked well. And then we started doing large websites to the tune of, one of them was $50,000, and it was actually a company out in Montana, and they were dragging their feet. And the project should have taken about 6 months. It ended up taking a year and a half. And we'd done all of our work and we were waiting on them, and it was killing us. And so, from that point forward, I started setting payments due upon our deliverables. So even if the client was waiting, we still knew that we were getting that cash flow.
Yeah, and I would add, don't be afraid to withhold, services until you get, a payment. If you feel that your receivable is at risk,
right,
and it's a project that you're, in the process of, don't continue if somebody's late,
right,
because that's red flags all over it, and like you said, Dave, I mean, you have subcontractors you may have to pay, and you don't want to be, on the list, because you're not paying them because you're not getting paid.
Right. So our last question is from Jasmine here. At what point do you think a startup should start using QuickBooks? Well, it's kind of I think it's kind of a softball question, but any new company, what point should they start using it?
Right off the bat. Yeah, right off the bat. Get yourself, they do have scaled down versions. They used to have something called QuickBooks Simple Start. I wouldn't necessarily recommend that, for startup companies now. I'm just telling them to go with QuickBooks Online right off the bat. You can set up all of your integration with your bank, get a lot of these processes automated, so you can spend time running your business and doing things that add value. I mean, even if, God forbid, you have to spend time chasing down receivables, at least you have the time to do that because you're not spending a bunch of time doing your routine bookkeeping.
Right.
So get an accounting software, even if you're a startup company and you have, $10,000 of business for the entire year, you're just really, really getting started. It's a good idea to, start off on the right foot.
Right. Yep, 100%. Okay, well, we are at time. Todd, if people want to get a hold of you or directly ask you questions or CTM, how can they reach out to you?
Well, my email is tjc@ctm-cpa.com.
Okay.
Our website is www.ctm-cpa.com. Reach out to me via email, and I'll get back to you as soon as I can.
And we'll leave Todd's contact information in the notes as well. If you're watching us on YouTube, press subscribe, smash the bell. We've got all sorts of other great interviews that we've done to help people manage their small businesses and their startups. We've got some other really interesting shows coming out. One is on patent law, so I get a lot of questions on copyrights and trademarks and utility patents. And so we have a show coming up addressing that. Todd, thanks again for your time today. Super informative, important stuff for any small business owner or entrepreneur.
Yeah, thank you. Just get started on the right foot, and invest a little bit of time up front. It'll save you hours and days of frustration, in the long run. So,
all right. Thanks a lot, Todd. Take care.
You too. Bye.